Ever wondered what would happen if an entire country, a major economic powerhouse, decided to go all in on a single cryptocurrency for its banking system? Let's talk about Japan and XRP. What if every single bank in Japan, from the mega banks in Tokyo to the smallest regional cooperative, decided to use XRP for their transactions? This isn't just a fantasy, it's a fascinating thought experiment with some very real-world roots. First, let's set the stage. Japan's banking industry is colossal. We're talking about one of the largest in the world by total assets. The sector is dominated by three giants you've probably heard of: Mitsubishi UFJ Financial Group, Mizuho Financial Group, and Sumitomo Mitsui Financial Group. But it's not just about them. There's a vast network of regional banks, Shinkin cooperative banks, and other financial institutions that form the backbone of the country's economy. Japan is also known for being forward-thinking when it comes to technology and finance. It was one of the first countries to legally recognize cryptocurrencies as a form of payment. So why XRP? Unlike many other cryptocurrencies, XRP was specifically designed for financial institutions. Its primary goal is to make cross-border payments faster, cheaper, and more reliable than the current systems, like SWIFT. The company behind XRP, Ripple, has been actively building partnerships with banks around the world for years, and they have a particularly strong presence and history in Japan. Let's remember SBI Holdings, a major Japanese financial services company. They have a joint venture with Ripple called SBI Ripple Asia. They've been a huge advocate for using Ripple's technology in the Japanese banking sector. They've even launched crypto exchanges and have been vocal about the potential of XRP. So, the idea of Japanese banks using XRP isn't coming out of nowhere. The groundwork has been laid for years. Now imagine the switch is flipped. Tomorrow morning, every bank in Japan starts using XRP and its underlying technology, the XRP ledger, for their domestic and international payments. What's the first thing that happens? Speed. Right now, sending money internationally can take days. It has to go through multiple intermediary banks, each taking a cut and adding time. With XRP, a transaction can settle in about 3 to 5 seconds. That's faster than you can make a cup of tea. Think about a small business in Fukuoka that needs to pay a supplier in Germany. Instead of waiting 3 business days and worrying about exchange rate fluctuations during that time, the payment is sent and confirmed almost instantly. The bank converts yen to XRP, sends the XRP across the ledger, and the German bank receives it and converts it to euros. The entire process is seamless and incredibly fast. For the entire Japanese economy, this would be like upgrading from a dial-up modem to a fiber optic internet connection overnight. Then there's the cost. Traditional international transfers are expensive. There are wire fees, correspondent bank fees, and less than favorable exchange rates. Estimates suggest that Ripple's technology can cut transaction costs by a significant margin, some say over 60%. For Japan's megabanks, which handle trillions of dollars in transactions, these savings would be astronomical. We're talking billions of dollars annually that could be reinvested, passed on to consumers as lower fees, or used to boost profits. This efficiency doesn't just benefit the big players. For regular people, sending money to family abroad or making online purchases from international stores would become cheaper and simpler. The friction of global commerce would practically melt away. But the biggest change would be something called liquidity. Right now, banks have to hold vast sums of money in different currencies in accounts all over the world. These are called nostro, vostro accounts. This is just parked money, tied up to ensure they can facilitate international payments. It's a hugely inefficient use of capital. With a system using XRP, banks wouldn't need to pre-fund these accounts. They could source liquidity on demand using XRP as a bridge currency. This would free up trillions of yen across the Japanese banking system. Imagine all that capital being unlocked. Banks could use it to offer more loans to businesses, invest in new technologies, or strengthen their financial positions. It would be a massive stimulus for the entire Japanese economy, driven purely by technological efficiency. So, what would this mean for XRP itself? If every Japanese bank is using it, the demand and transaction volume would skyrocket. We're talking about a constant, massive flow of value through the XRP ledger. This would likely have a profound impact on XRP's price and its status in the crypto world. It would no longer be just a speculative asset. It would be a core utility for one of the world's largest economies. Its primary use case, as a fast and efficient bridge asset for banks, would be proven on an unprecedented scale. This would create a powerful network effect. Seeing Japan's success, banks in other countries, especially in the Asia-Pacific region, would be under immense pressure to adopt similar technology to stay competitive. South Korea, Australia, Singapore, they would all be watching closely. A successful nationwide implementation in Japan could trigger a domino effect, leading to a regional, and perhaps even global, standard for interbank payments. Of course, this is a best-case scenario. There would be huge challenges. First, regulation. While Japan is crypto-friendly, a move of this magnitude would require a massive overhaul of financial regulations. Regulators at the Bank of Japan and the Financial Services Agency would need to create a new framework to manage the risks, ensure security, and protect consumers. This would be a monumental task. Then there's the technical integration. We're talking about integrating brand new technology into the legacy systems of hundreds of different banks. Some of these systems are decades old. It would be a complex and expensive undertaking, requiring immense coordination and technical expertise. There would be bugs, glitches, and a steep learning curve. The transition would not be seamless overnight. And we can't forget security. Centralizing so much of a nation's financial plumbing on a single digital asset and its ledger creates a massive target for cyber attacks. The security of the XRP ledger itself is robust, but the endpoints, the bank's own systems, would be the weak links. A single major breach could have catastrophic consequences for public trust. There's also the question of volatility. While XRP is less volatile than some other cryptos, it still experiences price swings. Banks are naturally risk-averse. They would need mechanisms to hedge against this volatility, perhaps using sophisticated financial instruments to lock in prices for the few seconds a transaction is active. While the speed of XRP transactions minimizes this risk, it doesn't eliminate it entirely. Finally, there's the human element. There would be resistance to change. Bankers, employees, and even customers would need to be educated and trained on this new system. Public perception would be crucial. The government and the banks would need to launch a massive public relations campaign to build trust and explain the benefits of this new financial superhighway. But let's assume they overcome these hurdles. A Japan fully integrated with XRP would be a financial powerhouse unlike any other. It would have the most efficient, cheapest, and fastest payment system on the planet. This technological edge would attract foreign investment and solidify Tokyo's position as a leading global financial hub in the digital age. It would also set a powerful precedent for the role of digital assets in the future of finance. It would prove that cryptocurrencies can be more than just speculative investments. They can be fundamental tools for improving the global economy. The success of XRP in Japan would force central banks around the world to accelerate their own digital currency projects, or CBDCs, and reevaluate their partnerships with private blockchain companies. In essence, if every bank in Japan were to adopt XRP, it would be a shot heard round the financial world. It would be the ultimate stress test and proof of concept, potentially ushering in a new era of finance defined by speed, efficiency, and interconnectedness. It's a bold vision, but given the existing relationships and Japan's innovative spirit, it's one of the more plausible what-ifs in the entire crypto space. It would change banking in Japan forever, and quite possibly the rest of the world too. What do you think? Could this really happen? Let me know your thoughts in the comments below. Thanks for watching, and if you enjoyed this deep dive, Make sure to like, subscribe, and hit that notification bell for more content. See you in the next one.